Hello, everybody. This is Rich Checkan here at the New Orleans Investment Conference, and lo and behold, look who I found wandering the halls, but none other than Adrian Day of Adrian Day Asset Management. How you doing, Adrian?
Well, I'm fine, Rich. Thanks for asking me.
Yeah, no problem. Thank you for taking the time. I know how busy you are at these events. Everybody wants a piece of Adrian, and we get it as we see your performance all the time, and the insights that you give us in your newsletters and so forth. So I'm going to ask you to share some of those insights with our listeners. The first one, I think it's on everybody's mind. You know, all week long, we've had this pullback over the past few weeks, especially in gold and silver, but platinum, palladium pulled back as well. What do you think that means? And is this the end, or where do you think things are going from here?
Yeah, well, the first thing I'd say, Rich, and you've said this as well, the first thing I'd say is, and I want to really emphasize, this is not the top. This is not 2011 or 1980. In my view, we are so far from a top in the gold market. Now, why do I say that? I say that basically, essentially because there are no indicators of a top. You get indicators at the top, some hard, some soft, some hard data, some sentiment, and we're just nowhere near that. So just to put a couple of things on it, if I may, or a couple of examples. Obviously when gold was going up in September, October, I think a lot of us, you and I, a lot of us were saying, is gold moving too far, too fast? We know we can't.
10% a week, or whatever the heck it was doing?
It was almost every day another $100 hurdle was met, and it was really
not sustainable?
fun. It was fun.
It was fun.
Not sustainable.
Yeah.
But if you, we all naturally, we think in arithmetic terms, we think of numbers. But if you look at it in percentage terms, look at a log graph. Look at a log graph. And the last 3 years of gold, since gold started to move up, do not compare with 2009 to 2011 or even 1979 and 1980. It just doesn't compare. Yeah. So that's the first thing. In terms of historical big gold market tops, we are nowhere near that. And I think the other thing would be more sort of sentiment and soft sentiment. You simply were not seeing the kind of signs of a mania, certainly, but even of a top that you normally get. You look at the GDX and GDX flows, you were not seeing huge inflows of money coming into the gold stocks in the GDX because of Peter Schiff's brilliant marketing, and I mean that literally. We were getting some inflows, but most of the gold funds I were talking to were still getting outflows.
Wow.
And other indicators as well. Gold just was not the topic du jour. And normally at a big top, you vaguely remember, but your uncle certainly remembers 1980.
Yeah.
Gold was the topic du jour.
No question.
And it is not. It was not now. So when you look at the flows and you look at the fact that over the last month and 3 months and year to date there have been outflows from the GDX, in my mind there was very, very little public participation. And you simply cannot have a major top without public participation, almost by definition.
Can I dig a little bit on that?
Yeah.
I'm developing a theory. I don't know if it's true. I could be an idiot, and people have told me that over the years. I think because this is such a strange market, we really haven't seen the Western investor get in this in this trade, if you will, for gold and silver until just recently. We're starting to see a bit of interest. Prior to that, 3.5, 4 years, it's all been central bank buying, pushing that gold price higher, which is why the GSR, the gold-silver ratio, is remaining elevated. Nobody's buying the silver because central banks don't do that, and the Western investor's not in it. Is it possible that what we've seen over the past 3-4 years is kind of a head start on the price before the investor gets in this bull market and we really start to see it run?
I think absolutely. I like to say, this is the amuse-bouche, or the appetizer course, if you like. Or in opera times, this is the overture.
Gotcha.
And the curtain is about to go up on the drama. No, I think absolutely. So when people say to me, I think we're at, I don't understand baseball, but they'll say, I think we're at the 6th or 7th inning. So there's still room to go.
Yeah.
And if I understand baseball correctly, I think that is absolutely true. And in cricket terms, Maybe the first and second batsmen have now been, bowled out.
Yeah.
And now we're at number 3 and number 4.
Well,
And that's out of 11.
I like your analogy at sixth inning, especially when the Dodgers and the Blue Jays, for one of their World Series games, went 18 innings. So I really like that analogy of 6 innings right now.
Yeah, but the point is, I think we're close to the beginning. I think what we've had in the past, you're absolutely right. The last 3 years has been, you hate to say this time is different.
Yeah.
4 most dangerous words in the investment
Of course.
lexicon. But I mean, the last 4 years were not a normal start to a gold cycle. Let's just put it that way.
Gotcha.
And that's why the gold stocks didn't exhibit the normal leverage that they exhibit to gold, et cetera, et cetera, et cetera. So yeah, I think absolutely we're only at the beginning. And to answer your the second thing we were talking about beforehand, when will the North American investor get involved? Typically, the North American investor is concerned about economic factors. Mm-hmm. They don't have that real experience with gold as something that saves their life.
Yeah.
The way that in Hong Kong, Chinese who came across in 1949 and brought some gold with them, or Vietnamese,
Yep.
You know about that.
Absolutely, tale of the tales.
That's your...
It's the epiphany that started this company. Yeah.
Absolutely.
So.
But even in Germany, even though there's very few people, if any, who are alive in Germany today who lived through the Weimar Republic inflation, it's still in their DNA because their fathers and their grandfathers told them about it. We don't have that in North America. And so in North America, we buy gold primarily for economic factors, which means a slowing economy, lower interest rates, higher inflation, and a lower dollar. And let's face
We're seeing that.
We're beginning to see it.
Yeah.
But up until the last couple of months, that has not been the narrative.
Yep, agreed.
And so
as they say, it's the economy, stupid, right?
Yeah.
So.
But we're beginning to see it.
All right. You mentioned mining stocks. I know we got a little helicopter going by here, but you mentioned mining stocks. We've also seen kind of an exaggerated pullback in the mining stocks. Not uncommon, right?
No.
Where do you see that going? I think I know the answer, but...
Well, I mean, I think you're probably going to need to see gold get a base. Not necessarily go up, but it's going to have to be clear to people that gold has a base and isn't going down much more. And then I think you'll start to see people come back to the gold stocks and the gold stocks move up. Just not a very good, not even an analogy, but just to remind people, from April to August, gold did nothing. It moved absolutely sideways.
Yep.
But after the very first of that period, if you remember, the gold stocks started to move back up.
Yeah.
So we can easily have the gold stocks move back up without gold moving up. Just has to be clear that it's no longer going down.
Gotcha.
So I think we're going to see that. Is it going to be another 4 months? I don't know. I feel more convinced that it's going to be a shallow correction than I don't know the time. These things always last longer than we think they will.
Which is fine. Which is fine when you're in it for the long haul doing the right things.
Yeah.
So.
Yeah, but I think it's going to be shallow.
Okay.
And of course, a rollover in the stock market, Nvidia drops 10 or 15%.
All bets are off.
Then that would get people looking at other places to put their money.
Absolutely. Just last thought on markets and investments. And it doesn't have to be a commodity. It doesn't have to be a stock. Whatever you feel best about. Looking forward. What do you have the most love for right now? Is the best opportunity?
Well, for me, it's still gold stocks,
Yep.
and that's because gold and gold stocks, and that's because I think it's the best risk reward. And we've all talked many, many times, and I'm sure most of your listeners already have gold. But we've talked about how you start with gold. But assuming they have their insurance gold, we're now just talking about investments.
Yep.
Gold has a better risk reward than other things. I will say, there's no question. But with gold's big run over, particularly this year, gold is now, or let's put it the other way around, other assets are comparatively undervalued. So natural gas, oil, I think we're talking to Rick, I'm sure.
Yes, that was his pick, yeah.
So oil, natural gas, but I would also say copper. Although in the immediate term, maybe it's a little bit high because of all the shutdowns. But so people who want to trim their gold a little bit and put it into oil and gas, I don't have a particular and other things, zinc, nickel, are definitely more undervalued, but on a risk-reward basis. I still think it's gold because it's one big risk that these other things, other commodities have, and that is China's economy continues to slow down. Let's not forget, China still represents 30, 40, 50% of global demand for pretty much every commodity out there. And if the economy slows, people are not going to buy lead and zinc as investments.
Understood.
But they will buy gold.
Yeah, first and foremost, probably.
Yeah.
All right. We got something coming up here.
Yeah.
But before we get to that,
okay.
You do something for a living that we've partaken of for a long time, which is your asset management abilities.
Yeah.
And I think it's important for our listeners to know how they can get a hold of you.
Well,
if you're out there listening and you're like us, we've been around the metals markets, mining stocks, et cetera, this environment for many, many years, decades. But we do something else for a living. And we don't have time to pay attention and do all the research that's necessary to go out and kick the tires on the ground and talk to the folks running these wonderful companies. You need somebody to be in your corner and do that, and we've always asked you to do that for us, and you do an amazing job. So,
Thank you.
So if people are interested in those kind of services, how do they get a hold of you?
Well, the easiest way to find us is our website, adrianday.com. And then on that website, you can either click on a link to our money management or click on a link to our newsletter if you prefer to do it yourself. But we offer these, as Rich says, we offer individualized money management, both in global markets, but also dedicated to gold and resource.
Fantastic. And I love recommending or referring people to Adrian because invariably they come up to me at these conferences, like 3-4 people did today, and say, Rich, thank you so much. He's the one who told us about Adrian. We like making those referrals when they're so darn happy. So,
well, thank you. Yeah, and I've met a few of them.
Yeah. So, the last thing I just want to say is you get to hear us talk again, but we're going to talk with some other wonderful individual who just got done running this conference, and that's Brian London. We're meeting with Brian on Wednesday, November 19th at 7 p.m. Eastern Time for our final On the Move webinar of the year. And we hope everybody will join Adrian, myself, and Brian for that. It's going to be fantastic. We're going to talk about all the things that we learned here over the past week working with each other.
It's going to be a great show because, Brian is obviously not only a gentleman, but he's very smart and he's got a wealth of experience. I think it's going to be a great show.
I think so as well. So, Adrian, thank you for taking the time out of your busy schedule. I know what it's like here for you, and thank you all for listening. And we look forward to talking with you the next time.